This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. Happy Friday. This is Not Your Advisor with NYU Grad. October 18th on Friday. Let's jump into today's session and we'll break for the weekend. So just to summarize, I want to just mention that today we're going to talk a little bit about the silver breakout, and then I'll peel the onion on market breadth, what stuck out, winners and losers, and then go into the premium section. But silver has definitely broken out. When you look for signs of a healthy breakout, you want to look for volume. You want to look for the sector and how it closed the day. So looking at those three metrics for SLV, you had more than 2x the average daily volume. The average daily volume on SLV is about 19 million shares per day. We traded 42 million shares today. We closed near the highs and the entire sector rallied. So those are healthy signs of a true breakout. No qualms about it. Looking at the chart, my target on SLV, not the SI futures contract, SLV, the ETF, is 35. And if we can get above 35, we're going to go all the way to like $41. 35 is the measured move of the inverse head and shoulders, which you'll see in the show notes, marked in green. 41 is the measured move of the cup and handle breakout. And that cup and handle developed from 2013. There's even a bigger cup and handle that has developed since 1979. That's more down the road. If we cross that bridge, if we get to 41 and we go higher than 41, that will be the breakout of that older cup and handle. And if we can actually get past that breakout, we're going to go to like $80. Now, a lot of things have to happen for that to happen. I don't think that is a realistic call right now. But let's watch and see if SLV can get to 35 and potentially 41, where it will likely meet some resistance. If you take a look at the GLD versus SLV chart, which goes back to 2006, you can see that silver or SLV has been underperforming gold or GLD since 2012. And as GLD rallied, silver rallied as well, but not as much. And typically SLV, when we start to get into bull mode, will overperform or outperform GLD. So I suspect if this rally in precious metals is true, you're going to see SLV catch up to the performance of GLD. Now, looking at this chart from 2006, GLD is up 269%. SLV is up 118%. So if you take a look at what happened back in 2011, you can see that SLV overshot GLD by quite a margin. I suspect a very similar action toward the end of this bullish impulse in precious metals, and you're going to see SLV overshoot GLD as well. At that point, who knows how high GLD will be, who knows how high SLV will be, but when you start to see SLV outperform GLD markedly, that may be the sign that the move might be coming to an end, if history rhymes. I'll also post John Rubino, who had a great post on silver, the continuous contract testing 33 for the first time in a decade. So you can take a look at that and read it. And before I forget, I've been pretty consistent in posting this pattern that I keep seeing since September, where we ramp overnight on no volume, and then the rest of the day, intraday, we're just in maintenance mode. And the same thing happened today. The SPY had very low volume as well today. I know it was under 40 million shares, but let me just take a quick look in real time where we ended the day on volume. So the average daily volume on SPY right now is 51 million shares a day. We closed the day at 36 million shares traded. We were at like 21 million at 3 o'clock Eastern time. So there's no volume to be had. We're basically just making new highs every day, and all the heavy lifting is being done while we sleep overnight in the futures market. So that's not a good sign. What else? Let's keep peeling this onion. The fear and greed index right now is as high as it can be at a reading of 108. It's past the extreme greed. There's very high complacency, no risk management at this point. Looking at the 1 day and the weekly performance, for the 1 day, basic materials led to the upside as a sector, 0.85%, real estate right behind at 0.79%, communication services 0.7%, consumer cyclical 0.59%, utilities 0.5%, healthcare 0.49%, technology up 0.35%, consumer defensive 0.21%, industrials 0.15%, financials 0.14%. Energy was the only red sector, down 0.3%. For the week, you would think technology led, but you would be wrong. Utilities led for the week, up 3.3%. Then it was real estate, up 2.7%. Then financials, 2.3%. Basic materials, 1.4%. Industrials, 1%. Then technology, up 0.69%. Consumer defensive, up 0.67%. Communication services up 0.4%. Consumer cyclical 0.17%, healthcare down negative 0.05%, and energy lost the most, down 2.5%. I missed breath, so let me cover that. We had 827 new highs on the NYSE versus 71 new lows. On the NASDAQ, we had 105 new highs versus 24 new lows. 61% of stocks were advancing versus 35% declining on the NYSE. 31% of stocks were below their respective 50-day, and 31%, exact same percentage, below their 200 moving average. What stuck out? It was silver, outperformed gold, it outperformed many sectors. Right behind silver, I noticed also real estate home builders also were in the positive today, but specifically in the S&P, what was strong, you had Netflix up 11.16% after earnings, Lamb Weston Holdings up 10.16%, Intuitive Surgical 9.6%, Dexcom 4.08%, Insulet 3.43%, CSX 3.14%, Vistra Energy 3.05%, Southwest Airlines 2.96%, Medtronic 2.9%, Lululemon 2.8%, Stryker 2.7%, Aptiv 2.65%, Teleflex 2.4%, Palantir 2.1%, Pulte Home Builder 2.1%, T. Rowe Price 2.1%, Hormel Foods up 2%. In the NASDAQ, I'm deduping here because some of them are in both indices. Intuitive Surgical up 9.6%, ASML Holdings 3.2%, Coca-Cola 2.7%, and PACCAR 2.28%. What was weak in the S&P? You had Bungie down 6.3%, CVS down 5.2%, Schlumberger 4.7%, Cigna 4.5%, Archer Daniels Midland 3.8%, Fair Isaac and Company 3.3%, American Express 3.2%, Gen Digital 3.06%, Dell 2.09%, Halliburton 2.07%. In the NASDAQ, and Vertex Pharmaceuticals down 3.1%, and that was it. So for free members, continue to watch the forest, not the trees. Continue to watch the Mag 7. Next week, you have the BRICS Summit, which gets together Brazil, Russia, India, China to talk about geopolitical and business partnerships. There is rumored to be a new currency called the unit, which may be backed by commodities like gold, silver, oil, and a combination of. I'm not sure if that's why silver is ramping so hard or if it's just catching up to gold, but that's going to definitely move the markets, especially the currency and bond markets next week. Continue to watch earnings. There's a slew of earnings next week. A lot of meat on the bones coming out there. Have a great weekend. Premium members, please stay on. I have about 15 to 20 charts to cover today, so please stay on. That's my train.
Stand clear of the closing doors, please.